Hey everybody, Jason Moser here. Thanks again for joining us for another edition of Ask a Fool. Today we're taking a question from Thomas, and Thomas says he has positions in Disney and in Invensense in his portfolio. They both make up very big positions. Should I sell Disney and buy more Invensense, hoping for Invensense to rise from there? And I think that's a good question, Thomas, and while I can't tell you exactly what to buy and what to sell, your question makes me want to ask you a couple of questions, really. What I want to know first and foremost is, how much of each stock do you hold in your portfolio at this point? In other words, do you have overweight positions in Invensense or in Disney? Because that right there, I think, would give me a couple of red flags. But let's take a look at the companies here and see if we get a better idea of sort of where the investments are going and what kind of risks these entail. Invensense, for example, is a small cap tech company. It's very, it's certainly higher on the risk side from that perspective. If we look at Disney, which is a large, stable, blue chip type company, it's a much bigger company, lower risk, and it's about 70 times the size of Invensense at this point. And so again, while I can't tell you what to buy or sell, a couple of things to consider here. As a guideline, you typically don't want to overweight your portfolio in anything. Now, you're really taking on a larger amount of risk when you overweight in something like an Invensense as a smaller cap company. But no matter how much we may like the company, you need to expect the unexpected in investing always. And diversity really is what helps protect you from this. Now, the key word you used in your question, which kind of makes me wonder here whether you should do anything, is the word hoping, in that you're hoping for the stock to go up from there. And whenever I have a question and I'm kind of hoping for something, I want to take a look back and make sure I'm well diversified and not overweight in any one particular company. Whenever I have any questions on allocation, our own Robert Brokamp runs a great service here at the Motley Fool called Rule Your Retirement. And he offers up some very basic portfolio guidelines in there for asset allocation. Now, for folks who are investing with more than 10 years to go until retirement, the basic guideline there is to have no more than 15% of your entire portfolio allocated to small cap companies like Invensense. But that doesn't mean just own one small cap. When you're investing in small caps, you want to own a number of them to kind of protect yourself from that riskier investment. So you want to own many of those companies to really total up to that 15%. So that can give you maybe some numbers to look at when you take a look at your portfolio and you're assessing what to sell and what to buy. If you're looking to sell some of your Disney shares to take some gains, hey, that's very understandable. I've done it myself, and that's the point, right? But maybe it's worth your while to go ahead and take a look at some other opportunities out there in order to maintain diversity in your portfolio, or even to build up some additional diversity that might make you feel a little bit better about your overall investment goals. But it's a great question. I hope I've been able to help. For more information, make sure to check out Fool.com.